What is the health of the Australian economy? We know interest rates are rising. We know that quantitative tightening has begun that cycle. What will be the impact on house prices over the long term? Now, this is first part of a 2 or 3 part series that I'll release over the next week, where we'll be looking at the Australian economy from more than 15 angles. Okay, this is going to be the most deepest dive economic series or videos that I've ever produced. We're really going to get into it because I think, people want to know. You want to know what the reality is. You don't want to go by clickbait. You don't want to go by what the media is saying. You actually want to understand what's happening so you can make the right decisions. So if you're interested in your financial future and the Australian economy, rate rises, quantitative tightening, house prices, then carry on watching. My name's PK and I help people build passive income through property investing using data without needing a $15,000 buyer's agent every single time. And this channel helps you get ahead through understanding the Australian economy, understanding property investing, and understanding how to achieve financial happiness. So if you're interested in any of those, hit the subscribe button, turn notification bell on. We're at more than 10,000 subscribers. I'm so thankful for all of you guys. This is just real, authentic, raw community, which I love. Just focused around data, not me. Okay, so this is all CBA data. This is a presentation that they did, which isn't really open for the public until now. So here you go. This is the first chart, and there's about 25 charts I'm going to take you through over the next 2 to 3 videos. So, I don't know, grab a coffee or something. Don't rush through this. Do yourself a favor. Really understand what's happening. So the Australian economy has strong momentum heading into the interest rate cycle. Okay, and we can see that because GDP, this black line, has been consistently growing. It obviously took a slight dip in the start of 2020 when COVID started. Everyone was freaking out, and then it continued its trajectory. And you can see that the CBA forecast, everything past this sort of dotted line, is that trajectory is likely to not be as heightened. It kind of shallows out, but it goes back to long-term gradient, whereas in the last sort of 6 to 12 months, that gradient has been very, very steep. And the unemployment rate had been coming down all the way since 2015. Obviously, there was a spike because of COVID, and you remember everyone thought the housing market would crash and all that sort of good stuff. And then it's come below what the long-term trend would have suggested. Hence, why we're wanting, or why there's a need for interest rate rises. And one thing that's really important in the economy is to understand how consumer spending is going. This is how confident consumers are. So total CBA tracker, consumer spending has been going up ever since that sort of dip at the start of 2020 when we all found out that COVID existed. Since that time, it had gone up, and then as the lockdowns re-emerged, mostly in Victoria and New South Wales at the middle of last year, 2021, you can see that it sort of came down, and then that gradient has continued. So overall, consumer spending is very good. CBA can actually track their card spend. All right, so you can see here, once again, in that same time period around July 2021, the services, people spent less on services. Now, that obviously makes sense because everyone was in lockdown in many parts of the country. But since that time, it's come back up, and goods never really had that kind of spiky period. So overall, people are spending money, and you can see that it's online has been booming this whole time. In store, took a bit of a hit temporarily because of those lockdowns, and then it's back on. So that once again is another dimension or another angle of vision to say that the economy is tracking fairly strongly. Let's look at another demand side metric, which is retail trade, different types of sectors. So the yellow line, food and liquor, has been going well. Household goods been going well. Eating out came down when the lockdowns emerged at the start of the COVID lockdown, and then in the middle, in the one that was towards the end of last year or in the middle of last year. But everything's trending up again. Retail trade in terms of state by state Victoria was really, Western Australia didn't have a huge amount of volatility because they were locked down, not because they were stuck at home, but the whole state was in lockdown. You can see that New South Wales and Victoria were the most truffy, or the ones that dipped the most, because obviously the harshest lockdowns were over there. But overall, the trend is upwards, and everyone is out and about, basically in all states and territories, spending money. And this that can be seen as a summary measure in this red line, where you've got a few lockdown periods here, but overall demand is remarkably strong. The labor market is very tight, is incredibly tight. Okay, so when demand is strong, people employ. When people employ, then obviously people get jobs, and the labor market becomes tighter and tighter. There's more jobs than there are people looking to find a job. That's the definition of a tight labor market. So the labor force participation rate, obviously it jumped down in the middle of that March-April 2020 period, but since that time, both the employment to population ratio, this green line, has gone up, as has the participation rate. So, we're at record participation rates. People who want to find a job are actively looking and getting it. It's not that they've become disillusioned and stopped looking, which is when you're technically not part of the participation rate, even though you're unemployed. So they're looking and they're getting a job. The labor force as a percentage, unemployment rate has come down. Remember when it went all the way up to sort of 13%, and people said, once again, it's the end of the world and depression and this and that, house prices, all the banks said it, all the sort of naysayers and lemon suckers said it. You can see that never happened. But now, as in the housing market didn't crash and we were all not just surviving on bread, but all came down in a good way. Unemployment rate is obviously, the headline unemployment rate is under 4% now, as you can see in this red line, and this is the underemployment rate. The underemployment rate is this blue line, which means that people who are employed, but they could be doing more hours. Okay, this has been a chronic problem in Australia. Productivity has been very low, but this has come down again. So this is what's creating that pressure of wage price growth, and therefore also contributing to inflationary pressures. So unemployment rate went up to a high of, you could say about 8% here. Underemployment was close to 15. Both of them are coming down now. And the overall labor force, Australian labor force underutilization rate, therefore, has also come down. So people are pretty utilized. We're kind of, think of it like you're wrapping a present, like, well, I'm going on holiday tomorrow, so maybe a better example, you're packing your bags to go to holiday. It's like you're really struggling to do that zip up. There's so much in that bag. That's what's happening to the Australian labor force. There's so much work out there. The current amount of people in Australia really isn't enough. We need more immigrants. And then this just further proves that, and the labor demand is exceptionally strong. So unemployment and vacancies, so the unemployed, the number of hours or the number of people has come down, and the job vacancies have gone up. It's an inverse relationship. When this purple line, there's more job vacancies, that means that there's more people applying for those jobs and getting jobs, and therefore the number of people unemployed comes down. That green line comes down. And this middle chart is very interesting. It's actually, if you're a client, you know that we pay a lot of attention to this as part of the Property Investment Accelerator mentorship clients. We look at this on an LGA by LGA basis. Very important forward-leading indicator metric for capital price growth, or capital growth for house prices, is job advertisements. So it's just been doing so well. Ever since sort of ever since that sort of March, April time, 2020, it's sort of consistently gone up. It's at a record high, which means the labor market is at record peak or strength levels in the last 10 years. And unemployment and vacancies, so it's kind of the inverse. So job vacancies to unemployment, which is this blue line, and unemployment rate, just another way to look at it. I won't go into it in too much detail, but you can, suffice to say, all these metrics that the politicians throw around, the media throws around, you can see them in front of you here, and the trends, which are very encouraging. The Australian economy is strong, and households are cashed up. People think that interest rates will rise, and therefore people will default on their loans. There will be foreclosures. People won't be able to make their mortgage repayments, and the whole, house of cards will come crumbling down. Let's just assess that hypothesis against the reality of data. So the savings rate, right, as a standard deviation or as a variation from normal, is at basically all-time highs. So this blue line, which indicates a standard deviation from just long-term averages. We've never had such good savings rates. I mean, in fact, we had good savings rates even before COVID, but that's just, further being exacerbated because obviously couldn't travel, couldn't spend money on too many things, so people kept it in their mattresses, so to speak. The CBA, now this is because this is bank data, it's really powerful. They actually know how much savings they have from customers, right? So the average balance for both offset accounts and deposits is really, really interesting, right? So deposits have really spiked up, and so have offset accounts. So people sometimes say, oh, look, savings rates are high because people have just refinanced their loans and that loan amount is sitting in their offset account, but it's actually not their money. It's just a loan that's sitting as cash in an offset account. That's true. This orange line has definitely gone up, but the deposit line has gone up just as much. So all this cash sitting in different bank accounts in Australia is not debt necessarily. And this is what households are able to draw upon for the next 2, 3, 4, 5 years when interest rates go up. And I'll come to exactly how much interest rates will go up and what our view is around that. But you can see how strong balance sheets are for the average consumer. And you can see what type of people have these strong balance sheets, these strong offset accounts, these strong savings accounts that act as a insulation mechanism against any downturn, against any unemployment, any interest rate rises, is everyone. So Gen Z has gone up, Gen X savings rates or deposits have gone up, millennials, the boomers, have gone up as well. So it's not just, oh, look, old people have got richer. It's not the case. Everyone has consistently or similarly become wealthier. And that's a good thing because that means that the average person is able to withstand interest rate rises. I'm not saying it's going to be able to withstand interest rates rises up to 5, increase by 5% or 7%, but you'll also learn towards the end of this presentation that that is not how much interest rates are going to rise. Okay, so this was the first part of the deep dive on the Australian economy. In the second part, which I'll release in a couple of days, we'll go through more angles of vision for the Australian economy, and we'll get to the impact on house prices, once again, using data. I know this kind of content isn't for everyone. It's kind of technical, it's kind of sophisticated, it's not the kind of clickbait stuff that you will just scroll through, but it's powerful. And this is the sort of stuff that allows you to really enhance your intellect and make money. That's why you're on this channel, right? You want to make money. This is how you make money. So watch out for that second video. Hit subscribe right now and tell me if you have any feedback and things like that in the comments. My name's PK. Give it a like, turn notification bell on. See you in the next one.